This week on the G.L.O Show, we're talking about mortgage note investing, talking specifically about second note purchases with Fuquan Bilil. Welcome to the G.L.O Show. Real estate investing is ever changing, and here in the G.L.O Show, we promise to keep you abreast of the cutting edge of what real estate investing is and what it will be in the future. I talked in the past about buying notes. Today, we have Fuquan Bilil here to talk about mortgage note investing. Fuquan, welcome to the show.
Thank you, Chris.
So Fuquan and I have done a lot of stuff together for a good long time. In fact, Fuquan used to work out of my office for a little bit.
Yes, absolutely.
And now, Fuquan has done lots of different types of real estate investing, but the one that he's focused on now is buying mortgage notes, particularly distressed mortgages. Talk a little bit about that, Fuquan.
Yeah, well, I've been investing in real estate since 2000, about 14 years doing fix and flips. I wanted to get into something that was a little bit more passive and create more time and freedom. So when I discovered the world of notes, I was like, wow, I wish I would have done this like 6, 7 years ago. I remember being in the first pool to you. It was a big pool of $2 million worth of notes, and we was like, you know, how are we going to buy this? This is probably back in, I don't know, 2011, something like that.
Sure.
And I just kept chipping away at it and just jumped right into it, and very grateful for that. Now we're raising money and buying notes direct from the bank, and it's just a great opportunity.
More and more of my clients have moved over to diversify into note purchases. I myself have done several mortgage notes, and we take it all the way from beginning of purchasing the note all the way to the foreclosure. I'm lucky enough to have my own firm. My firm handles the foreclosure process, and then we actually take the property back. Also, another alternative is to negotiate a deed in lieu of foreclosure with the homeowner. Now, Fuquan, I know you do firsts, but let's talk about one thing that you're kind of niche-y, which is second lien notes. Not a lot of my clients are doing that. Let's talk second mortgages.
We like that space because a lot of people, like you mentioned, they don't understand it, so they're afraid of it. And my goal when I first got into business was a way to help homeowners stay in the house and make money. So the second actually allows you to cash flow, keep the homeowner in the property. We focus on a special kind of second behind a performing first. So we will only buy a second mortgage if the homeowner is paying their first, and our only goal is to get in and see what happened, what went wrong. Are you better off or worse off, and try to create a solution for them that works, and then they start to pay us the new bank. Now it's truly passive because you have a servicer that will collect the payment and send you just mailbox money. So we love it. I mean, we don't really foreclose too much in the space. Our goal is if we foreclose, we fail. That's our motto actually. So we do a lot to keep the homeowner in the house. If they can't afford it, then we'll try another strategy, which is the deed in lieu of foreclosure or a short sale to avoid the foreclosure option.
So you're doing a lot of modifying of those second notes.
Yes, absolutely.
So you're buying at a discount, which allows you to readjust the payment. Do you do principal reductions or just interest reductions? Gotcha.
No principal reduction. Usually the borrowers are 3 to 4 years behind, so we use the arrearages as leverage. And sometimes we'll do like a 2-for-1 if they're 10, 15 grand behind in the mortgage. And arrearages will say you give us 7,500, we'll waive the balance. And we use that as leverage to get them as an incentive to start paying. I mean, a lot of borrowers have 401ks and IRAs that they can use as hardship without being penalized, and they just don't know that. So there's a lot of situations where we're able to tap into the IRA and get some of those arrearages. But we've never done principal reduction. In some cases, we probably in the future we will, if we have to give an incentive if the house is too far underwater. And the homeowner is complaining, my house is underwater, there's no value, and we say they want to move forward, we'll use that as an incentive because we're buying these things at a discount. You know? So usually we'll buy at 15, 18 cents on the dollar. We'll rehab the note, like you rehab a property, we do a workout, we season it for a year, and then we sell it for maybe 50 cents on the dollar.
So that's the second note pools. More of my clients are buying those first note pools because they're looking for the dirt. They're looking to take control of the property. You said in the seconds, we don't foreclose, but I know you're doing some stuff on the first space too. Let's talk about first notes.
We just started morphing into that, usually because you're at the country club and you're talking about what you do, and you start talking about second mortgages, people start looking at you like you're from Mars because it's like risk, 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 and they just don't understand it. So jumping into the first space is easier to raise money, one. It's easier for the average real estate investor or investor to understand it. Because this is because of the conditioned mind. They just think first is first and you can't do anything with second. So we're morphing into that space just for that reason, to be able to raise more capital, And also to play in the first space. There's a lot of competition in that space. So we kind of like the seconds. We always joke and say seconds come first. But the returns are higher in second. We're seeing returns of 30% and above, annually. First, the returns could be from 8 to 15%.
Right.
And there's a lot to do with that. You have forced place insurance, you have taxes, you have high foreclosure costs, you got to initiate foreclosure right away. You don't know what the borrower wants to do. So, we figure if we mix the population with first and seconds, we'll add diversification to the portfolio and, create some leverage.
And one thing I love about real estate is because there's so many different ways to invest in real estate. Investing in the debt, really, to me, that is a real estate play. Whether you're in second lien position or first lien position, is still a way to take advantage of this incredible distressed market that's created opportunity after opportunity after opportunity.
I would say definitely for those real estate investors that are local and want to get into the note business, definitely try to buy a first mortgage in your local area. This way it's easier for you to manage if your goal is to foreclose, take the property and rehab it. You get to the property before the REO agents and before the average real estate investor that's at the sheriff's sale. So note investing is definitely something that's cutting edge, and is new, and I think it's going to be around for a long time.
Oh, absolutely. Now we're going to have a speaker on next week who's going to be talking about self-directed IRAs. Are you having any of your note purchasers use IRA money to buy notes?
Absolutely. We just did a trade today when someone used their self-directed IRA to make the purchase. I think that's the best way to invest into notes is to use your IRA, especially if it's a Roth, is tax-free. So I would definitely encourage anyone who has an IRA, they don't need the money right away, they can use that self-directed IRA or the IRA or even 401k to invest into notes. We had, like my sister-in-law, she actually bought a reperforming note. She wasn't able to transfer her 401k to an IRA because she works for Prudential and they have all these strict rules. So what she was able to do was borrow from her 401k, pay 5%, and buy a reperforming note that's yielding 18% annually and arbitrage the difference. So that's a different way that you can invest using your 401k, but definitely IRA is definitely the way to go.
We're going to have Jared from Next Generation Trust on next week, and we'll be talking about maybe using some of that IRA monies for exactly that type of transaction, because that's some really interesting stuff. Fuquan, this has been a great educational experience here. If someone wants to learn more and get in contact with you, how do they do that?
Well, we actually have a Note Academy. We actually do like a cash flow boot camp where we teach real estate investors how to make the transition from a landlord to a lien lord. We do that as a 6 weeks course. They can go to nngnoteacademy.com and basically get all the information there. Or they can go out our website, nationalnotegroup.com, and we have information there as well.
And I know you're going to be, well, I'm looking to have you at the New Jersey Real Estate Investment Club real soon. We'll have you at a future event and we'll learn more about these notes.
Absolutely.
Fuquan, it's a pleasure.
Always a pleasure.
Thanks. Do you want to become a better real estate investor? Go to njreclub.com. You'll get invites to all of our events and all of the G.L.O. Show videos.